Rock and roll hoochie coo.
Well, welcome everybody. It's December 4, 2024. And unfortunately, as you may have read the news this morning, in a bizarre fashion, it looks like the CEO of United Health Group. So, not the CEO of the entire company, but the CEO of United Healthcare, the insurance operation, assassinated, as it appears, in New York today. Horrific thing, right before the company was to have a shareholders meeting, analyst meeting. So anyway, don't want to be a depressant, but that is actually, I believe it's the largest position in the Dow Jones Industrial Average. So it bears at least making sure everybody's up on that. Named Brian Thompson. All right, guys, we're back to Wall Street Beats. I'm your host and sometimes tech voice, Paul Meeks. Today we have an esteemed panel, as we always do: Robert Marson, Jeff Mackey, and Kevin Bakes Baker. So to get the party started, let's go to Robert. Robert, what say you this morning?
Well, I'm buying another online travel aid, another OTA stock there, Paul. I pooched the first one, which was Expedia, which I bought at 125 and sold at 130 the day the SOM rule was triggered when I decyclicalized a bunch of my longs. And
Decyclical. Love that. You should coin that term.
that was a bad day looking back because I left a lot of money on the table. The stock's up about 50% since I sold it, which is fairly common for the last 3 to 6 months in a lot of stocks that were very cheap, down a lot, and very cyclical. So apparently the stock market doesn't mind companies in cyclical areas these days, and the recession fears are well in the rearview mirror. So I'm playing. This is a multi-factor idea, TripAdvisor, and I just bought 1% position at the open today. So this is real time trading, people. This is not something I did 6 weeks ago or 6 days ago. I did it today, and it's just a starter position for multiple ways to win with this stock. So TripAdvisor used to be a prominent company. It's less prominent than it was in the travel business. The core business is a meta hotel business that they did very well with a long time ago. It's been under pressure from Google and from the big guys. And last quarter, that business shrank about 15% in revenues. So that's not a good thing. And the stock reflects the fact that the core business is under pressure. It's down at its 52-week low. That's a bad chart. That's the kind of chart I really like. But unfortunately, while the chart is broken, the business has more work to fix it than I would normally like. But there could be an event here that would help us get paid in the very short run as well. So the company is TripAdvisor, that hotel business, meta business that I talked about, which is very profitable but shrinking. They own two other businesses too. They own Viator, which is, I believe, the largest experience booking platform in the U.S. They have one major competitor that's private. It's valued at many, many, many multiples of sales in their last equity raise. I don't recall the name, but I could look it up if anybody asks. And that business is just starting to turn to an online business where you book tours, you book experiences with mom and pop tours. And this business had always been sort of word of mouth, I guess. You go into a hotel, you said, I want to do this trip. Does anybody provide this service? And the concierge would tell you if they knew of anybody, not just like fly fishing down the Colorado River, but even more arcane things. So that business should be a 20-25% a year grower as far as the eye could see. They also own a company called The Fork, which is Europe's biggest version and leading market share version of OpenTable. And, I don't know, maybe that's not a bad business. The Open Tables turn out to be a very good business. They can make something with that, even if it's in a region that's not here. that could be worth something. And that grew 17% last quarter, year on year. So there's two good businesses here. Unfortunately, the most profitable business is a shrinking business. Now they're not taking this shrink, um, lying down. They're trying to fix the business, so they're trying to pivot into a product that lets you manage your whole trip. So not only do you book it, but you manage it, and obviously they want to use Viator as that, so you could book your experiences online, your flight, your hotel. So they want to become like this full service provider. They've started rewards programs, giving points and discounts. They have a calendar with AI in it to help you schedule things. They're trying to turn the core business into something a little more interactive with more opportunities for people to rebook the service and stabilize the business. If they could turn TripAdvisor brand around with a repositioning of what the product does for the customers, that could really make this cheap stock very very much more viable for the long run, and improve the valuation. So the stock is
Hey,
down.
Robert, are they on
Uh,
a December 31
yeah,
fiscal quarter
yeah,
end? So
yeah.
we're
On a
gonna
normal,
hear from you in late January.
yep, they're
Okay.
on a normal calendar year, and the stock, it hit 28 this year, I think, or last year. On the company was up for sale, and for whatever reason, the interested parties or these guys, I haven't determined this yet, walked away from the deal. Now, it's 5 times EBITDA, 10 times earnings, net cash on the balance sheet, 1 times EV to sales, which is very cheap in a 3.5 EV sales stock market. And the company is still in play, because if you go and read the transcript,
Why would
uh,
they not be in play, Robert? I mean, is that your catalyst here? Because these guys just look like a great private company, kind of sitting there out in the public world. They should be kind of taking cash flow out of this thing and just be run by the TripAdvisor family.
they should be. So, and I don't know why the deal fell apart the first time, but the stock went to 28 on the deal. Okay, at publicly, just as a publicly traded stock. So they said in their last call that they would be buying stock, but they're not allowed to, because they have to hold off on that because of the potential for strategic alternatives being realized in the short term. So that tells you they're talking to people right now. I mean, again,
They should buy all this stock.
it may not, yeah. So it's a tax loss selling stock at the 52-week low. It's a cheap stock. The numbers are eroding, but not horribly. It's not imploding, which is different than eroding. And the company is negotiating its sale right now. So if it does happen, you could get a windfall. You can wake up tomorrow and have a 22.75 deal from $14. So again, it's a lot of moving parts here, but there's 2 or 3 ways to win. They could fix the core business. They could spin off the two good businesses. They could get bought out in total. They could have a positive. They could have a beat and raise next quarter, because Lord knows they've been taking numbers down fairly aggressively. So I just, I'm not in love with the company. I can't say it's the type of growth I really want to own when I want to own these stocks, but there's enough ways to win here that I'm willing to take a starter position in this and see what happens.
Hey, Robert, this is Beggs. What makes you? What puts this on your radar screen? What triggers you to take a look at this in more detail?
I owned it the first time it went to 28. I owned it before it went to 28. I bought it at 14 and change, was disappointed in the numbers, and sold it at like 16 and change. So I guess I have a problem holding these OTAs to fruition. And then I watched it go to 28, and I kicked myself in the ass for, a couple of months while it was up there. And then it went back down, and I was following it. And I always said if it went back to 14, I would look at it again. And that's what I'm doing.
All right, so it doesn't pop up on a screen of EV to sales or inflection points or anything like that. It just
It does pop up on a stupidly cheap valuation screen with a 52-week low. That's the screen. And that makes it most likely being sold for tax loss purposes in here, in my opinion. Okay.
Yeah.
So it's
Well,
sort of a dead cat bounce once the calendar turns over to next year.
all right. Well, thank you, Robert. Jeff, let's move on to you. Tell us a little bit about Foot Locker, whatever else you want to talk about this morning.
It's a grim nightmare at the Foot Locker, Paul. I'm not going to lie to you. It's Mary Dillon came over there from Malta. It's kind of taken on an Aaron Rodgers with the Jets vibe. Things aren't going super for her there. The problem really is just Nike. And you don't want to point fingers, but I'll do it for them since they can't, since Nike sells too much of their stuff for Foot Locker to really stand up to them. But as you can see there, the trade all year, we've been talking about this since this show started, belong to shoes, everyone except Nike. That's just the basket I made of, your five nearest competitors, your kind of the hype names. On Cloud Deckers with their Hoka, both of which Foot Locker cited. I got Crocs in there, got Skechers in there, just a basket, and Adidas. Just a basket of kind of everyone that's feasting on the corpse of Nike as they lose market share. With Foot Locker, what you heard was kind of a lot of signals of what you don't want to be as a retailer right now. Uninspired e-commerce, a relationship with a 40% supplier that is just kind of dominating whether or not Foot Locker can control their own promotions. And that as a result, they're not able to lever the full price sales at OnCloud and Hoka. Now, I'm long OnCloud, which is ridiculously overpriced, but they're growing and taking share. And man, there's a lot of money to be made taking a $50 billion guy like Nike out to the woodshed. Eventually, Foot Locker will be a turn. It's not going to be this day. That stock's trading at 1986 levels, Paul Meeks. That's grim stuff, baby. I had a mullet. I had flowing, beautiful hair in 1986. Michael Jordan was a young man with big hops. He wasn't just a surly drunken golfer. That was a long time ago. This has been dead money for a very, very long time, and I'm not sure Jordan's coming back anytime soon. Also, and kind of we got Build-A-Bear Workshop tonight. That's been another player that we've liked all year. We're kind of in the garbage time period of the calendar. We've got some bitsy piecey retailers reporting. These guys, Build-A-Bear doesn't owe us a damn thing for the rest of the year. Their stock has gone up something 70%, give or take. Still only 10 times earnings, still relatively cheap, cranking out the money. The expectations are mid-single digit growth. They'll get that. They'll get that for sure. They'll crank out cash. They've been left for dead for a long time ago. It's another one of those companies that I've continue to like, and it's the only place you can find anything close to cheap, which are the companies that were left for dead and simply aren't. Build-A-Bear, the most common response I get to this is, holy crap, they still exist. And the second one is, holy crap, it's making 52-week highs. That chart actually looks incredible, and it's been a monster gainer for the last 2 years. They're cranking it out. They aren't reinventing the wheel. They aren't reinventing the teddy bear. They're just taking advantage of the fact that they're still alive and their cash flow and starting to churn in a pretty good direction. So they report tonight. I'm still long Chewy, which is getting chewed up a little bit, but that's just fine. That quarter was good. Again, it's the garbage time of the year. You might find some trades, but I'm just looking for the opportunity to add some names and kind of appreciate the action, stuff like Amazon and Walmart and Costco that I'm afraid to sell.
Yeah. Well, and Shopify's results and guide, essentially confirmed that e-commerce thesis or Black Friday thesis or whatever you want to call it. Let's see.
We had 4 Black Fridays this November, 4 of them. Everyone was complaining about how late the holiday is. I mean, screw that. Target started at the first Thursday of November. They've been the fact that that actual store traffic was higher, despite these same deals be getting regurgitated all month long, is actually just a testament to the strength of the American consumer. Best in the world, baby. Best in the world. Good luck betting against the American consumer, dogs and teddy bears.
Jeff, you sound like Warren Buffett this morning. Hey, Bakes, we're going to wind up with you. And what say you today? Are you going to piss on some of our stocks, or are you going to give them a boost based on your technical analysis?
I love when Robert Marson becomes a momentum guy, and he almost throws up in his mouth when I say that. But he can do it despite himself. Bad charts and new lows makes gives me hives. But this is GTLS, and I wasn't on the call yesterday, but I always am hovering in the background. I listen to everything you guys say, especially the Black Friday roundup with Jeff and Berna. That was gold. I would put those two up against anybody. I don't care, on CNBC or elsewhere. We actually make money for people. Robert Martian makes money for people, this is, what I'm trying to bring to the table here, if we can call up this chart, is I want him to. I almost want to tackle him and keep him away from the sell tickets, because I don't want you to snatch defeat from the jaws of victory. This is a new high here recently above this 184.65 level. I'm going to the weekly because I want to show the perspective. Okay. That's a new high, boys and girls, from a 4-year base without a lot of resistance. And I hope it's cheap enough so that Robert says, you know what, there's more gas in this tank, because up around this 242 level, I mean, there isn't a heck of a lot of resistance. And if we can make a case that LNG and gas has a future here, and there's valuation upside, I think you've got another 50 points here. And I want Robert to have it, and I want our subscribers to have it. So until and unless he says, hey, I found this fundamental trade check that really scares the hell out of me about Chart Industries, symbol GTLS, I think this is good to go. So,
Bakes, we determined yesterday that drill baby drill won't happen, but liquefy baby liquefy will happen.
Yeah, you got to. Your marketing panache isn't there. We need something a little, that's why I'm Bakes. Monosyllables. You need monosyllables. Monosyllables. That's what we're going for here. All right.
Bakes, I also determined that it was compared to its peers. Okay, it was still cheap enough to appreciate another 50 to 100% over the next year or two.
You see, that's why we get paid the big bucks, okay? We dovetail. You're doing your spreadsheet gymnastics. I'm just reading charts, and we all make money and have fun. So who is the number one competitor, by the way, that I should monitor for chart?
They really don't have a pure play. I was putting in the electrical equipment companies, because to produce an electron, you need a fuel, and these guys are going into the same, chains of business from natural gas molecule to electron.
Okay, all right.
They compete in divisions with people like Halliburton and some other companies in the oil service space, but they really and they have a compressor business that competes with other companies. I don't really know who owns the compressor business anymore. It used to be Ingersoll Rand, but I don't know if they're public anymore or were bought out. So that would be the competitors.
Yeah, Hanover was the name that I knew from 1,000 years ago. But
how about Cheniere Energy, LNG?
That's a customer, one of their biggest customers.
Okay.
But what they said was they said they have like 8 or 10 projects undergoing now. They have 6 more announced. But because of the restriction on booking new LNGs, they have dozens of new LNG projects in the works, and these are multi-$100-million projects. So if it's dozens, 26 to 50, if LNG really explodes because the Trump administration really incentivizes it instead of trying to thwart it, this business could have a lot of growth and conceptual appeal going forward.
I like it. All right. Next is my good friend Berna asked on the show about potential people fading the Mag 7 and moving on to other things. And I think there's some of that, but bottom line is new highs are new highs. This is the Round Hill Magnificent 7. Tesla's number one, as you might imagine, and it's getting juiced up. It's picking up onto new highs. The top names here are, Amazon is hitting new highs today. Jeff's been all over this, and I don't know what the volume is today. I want to see what the volume looks like, but because there has been Bezos sitting on it to an extent. I don't know if he's exhausted his selling. But yeah,
that chart looks pretty good to me, Bakes. I don't know what Bezos is doing, but that looks like they're kind of eating up his supply wherever it is.
Okay, and
towards 200.
and that's That's what the kind of thing I look for. I'm looking for, a new high. The volume's picking up. The relative strength is improving. And so, the realities of this business are, 75% of the PMs out there that track to the S&P are getting their head kicked in. And so if they're going to be put on watch on December 31st by New England pension consultants and Cambridge associates, and they got to say, listen, at least we're trying. And so, we sprinkled the infield in December. They're not going to say this. I'm paraphrasing. But, at least we have some exposure here and we can fight to live another day and hopefully come close to outperforming next year. And so that's what's happening. So Amazon looks good.
Hey, Vic, just let me interject here. A fundamental data point is in Vegas this week. And I think the keynote address is this morning. Amazon has the Amazon Web Services reInvent Conference.
There we go.
So that's going on as we speak.
Okay, I like it. Tesla looks great. NVIDIA looks great. Meta hit new highs yesterday. Apple hit new highs yesterday on feeble volume, which is why I think it feeds into this window dressing narrative. I don't really like Apple. Yeah, there's not really an upgrade cycle, but at least I'm going to be 5% in the index is 6.5 or 7, and at least I'm in the game. Microsoft, I don't like. Microsoft is a sell, and I've been talking about that for a while. Lastly, and this is my Doge. General Dynamics meets Doge. GD meets Doge. DOGE. And I wanted to say something because people keep politics out of this. I don't care. You pull the level in November and then you're done. But I have a great high school football coach, Don LeBrun. What could have happened did. So Trump won, and Doge is for real, and this is happening. And I'm fortified as I come here week after week with, okay, here's one of the big 5 defense contractors closing below the 200-day moving average. Now, can I prove that it's Doge related? I don't know. But when I see Bernie Sanders and Elon Musk in the same frame, it fries my brain. And it's just facts are stubborn things. John Adams. Defense spending, government spending is excessive and fat and wasteful, and the DOD is ripe to get their 8th audit, finally their house in order, and find out where the billions of dollars are going, all 800 of them. And I just, my point being here is I don't care if you detest Trump. Don't let that impact your investment decisions. The stock market doesn't care about your politics, anyone's politics, right, left. It is absolutely irrelevant. And so what I hope Ben and I have brought to the table, and all of us, is this dispassionate discussion that, if you work at General Dynamics and you're not, tied up with restricted stock, start thinking about selling. I'm dead serious. We've seen this movie before where, you've been longtime employees of the banks or Disney or First Republic or whatever. And I just want you to get out of harm's way to the extent you can. This isn't investment advice and all those, lawyerly, proclamations. But, we're on to something. We've been on this for a while. Stay tuned to us because we're going to be showing this in 2025 where we were talking about getting out of defense stocks and the Booz Allens, and no one else was. And we want you to subscribe and make money with us and have a hell of a lot of fun.
Well, Bakes, you touched on it before, too. When the narrative lines up with the technicals, you got to respect what's going on there. The narrative for Amazon, that lines up with the technicals in terms of what you're seeing on the upside. And this is the exact opposite, man. This is a shit show. And so who's going to love this company? Who's going to love the defense contractor with Doge staring it down the face? Who gets long this? There's still something to be said for anyone can pitch this and you're going to dump it straight into the trash. This is just get out of the way.
Well, I'm with you, but people have stubborn narratives, and it's a Republican Congress. They love defense. They have to feed their constituents, and they have manufacturing plants, in Northern Virginia and elsewhere, and so they can't be touched. And if it wasn't for the interest expense line going above $1 trillion, like it's a rocket ship, then we wouldn't be talking about this. But now we are, and it's out of consensus thinking. And I think we bring that to the table. We talk our books, have some laughs, make some money. Maybe not in that order. It's all good.
Hey, Bakes, did you take a look at Lockheed Martin and Raytheon and some of the others?
I am all over. I mean, I come home every night, and I got to tell you, I really have a lot of fun with this because it challenges my thinking. Here's Lockheed. Okay, the only reason I picked on General Dynamics is that it hasn't taken out the 200-day moving average yet. But look at the volume picking up. Okay, this is right around. This is the election, and here's the volume picking up on the downside. Now, to be fair, it just could be some people saying, you know what, I've made money in this since the dawn of time because we're a violent, aggressive people. But things change. And when they change and you have to, challenge these assumptions, then I get the sell tickets out. And so for me, General Dynamics, I would sell a third without even thinking about it. And I'm watching this. But Raytheon RTX now, right? They changed the name. Same thing. You see how similar these are? You see the volume down here? It just hasn't taken out the 200-day moving average yet, which is me picking nits.
Yeah, well, they're all dogs with fleas. We'll find one with the most fleas, and we'll short it. All right, guys. That's about all the time we have for today. Again, our condolences go out to Brian Thompson, the CEO of United Health Group. And you guys, thanks for your input as always. We had some good stuff today, some very good stuff. I love it. And please, please, please step up and subscribe. And we'll see you next time.
Peace, Paul.